Hello and welcome to Unacademy IAS, a one-stop destination for all the English medium civil services aspirants. Welcome to another session of Economy this week, wherein we will be covering important economy-related articles from specific time period which have appeared in different newspapers such as Mint, Business Standard, Business Line, etc. And in this video, I'll be covering the articles which have appeared from the 10th to 16th July 2025. And these are the 6 articles that I'll be covering in today's session. Let me start the discussion. But before that, certain very important announcements. First one, a lot of you keep on messaging me, asking me for the PPT that I'm using in the session, as well as the PDF of the notes of the topics that I'm covering in the session. For this, all you simply need to do is join the Telegram channel using this QR code. After the session is over, the PPT's PDF as well as the notes of the articles that I'm covering in the session will be uploaded in my Telegram channel. Another very important announcement. I know a lot of you are appearing for the Civil Services 2026 and remaining are appearing for Civil Services 2027. If you want to ace this examination in the first attempt itself, you need to have a very comprehensive coverage of the static portion, updation of current affairs. You need to appear for multiple prelims as well as mains test series. All of this is available once you enroll into our courses, which is available at a price of 17,999. And if you use the code IAS English, you will also get an extension of up to 12 months free of cost. Those who are interested, do check out the details by clicking on the link provided in the description below. Let me start with the first article now. The first article I've taken is from Indian Express. SBI's 25,000 crore QIP. Why the bank is building the capital buffer. What are the important points? Let's try and understand. First and foremost, all of you should know is SBI, State Bank of India, is a bank which is majorly owned by Government of India. What do I mean by majorly owned by Government of India? It is a listed bank, which means the shares of this entity are available in the stock market. But more than 57%, I'm rounding off the number, 57% of the shares are with Government of India. Now this entity has proposed that they want to raise capital by issuing shares through a route called as QIP. Now what is this idea for QIP? Let me explain this. Entities which are listed in the market, listed in the sense those which are listed in the stock market, these entities, the stocks or the shares are available for trading purposes. If they want to further raise capital in the market, they can go for issuing of these particular shares to the public again. They can issue, let's say 2 lakh shares, 5 lakh shares, 5 crore shares, etc. to the public. That is, anybody and everybody who wants to purchase the shares can invest and purchase the shares. Of course, there is a process to be followed. But in addition to going for a, let's say public issue, there is one more type of a process they can follow. This is called as a private placement. Remember this. This is called as private placement. What is the idea of a private placement? Instead of issuing the shares to the public, to anybody who wants to invest in this particular process, the company or the entity will issue the shares for specific identified number of investors. That is essentially called as a private placement. Now there are 2 types of private placement. One is a preferential allotment, and the second one is qualified institutional placement, QIP. In preferential allotment, certain identified investors, including the promoters, I repeat, including the promoters, will be issued with the shares. Whereas in case of QIP, certain institutional investors. QIP essentially stands for qualified institutional placement. So identified, or let's say the institutional buyers will be identified, and these institutional buyers will be sold these particular shares, and these institutional buyers will pay the money to the entity, thereby entity will be raising lot of capital. Now when I use the term institutional buyers, what do I mean by this? Institutional buyers here refers to simply The financial institutions. Please remember, it simply refers to financial institutions. For example, pension funds, insurance entities, etc. So these financial institutions will be allowed to participate in the QIP, pay for the shares and purchase the shares. And this will help the entity raise the capital. Now, in the context of SBI, two more very important points here. Why is the SBI conducting this now? And any recent examples of, let's say, a QIP, which is the highest valued issued shares under the QIP. Please understand, the State Bank of India wants to pull in lot of capital, wants to collect a lot of capital. There is a concept called as Basel guidelines. Please remember this. There is this idea called as Basel guidelines. Under the Basel guidelines, the entities, that is specifically the banking institutions here, will have to issue different types of instruments and shore up, that is collect as much as capital as possible. And the objective of collecting the capital under the Basel guidelines is to ensure that the financial institution, that is the bank here, will have sufficient amount of capital in case there is any kind of a losses to be incurred by the bank. Now, under the Basel guidelines, specifically under Basel 3, please remember all of this. Under Basel 3, the banks are supposed to meet certain capital adequacy ratio, CAR, capital adequacy ratio. And under the capital, there are two types of capital, tier 1 capital and tier 2 capital. Between tier 1 and tier 2, which is more required for a bank, which is more formidable for a bank, on which type of a capital can a bank, right, basically depend more to absorb the losses? It is a tier 1 capital. And under tier 1 capital, there is one type of capital called as common equity tier 1, CET1, common equity tier 1 capital. This is raised mainly by issuing the shares in the market. Right? These are the shares which are issued by the entity. They will be able to collect the money and that money will be counted as a part of CET1 capital. Now the State Bank of India, it is proposing to issue 25,000 crore worth of shares through the QIP route. The capital that will be raised will be counted as a part of CET1 capital. Please remember this. And second point I said, with this issuance, if it is done, if it is conducted successfully, with this issuance, the QIP that will be conducted by SBI worth 25,000 crore will be the highest in India. Highest in India, mind you. And the State Bank of India, the last time it raised capital from the market was back in the year 2017. And the other entity which so far had issued the highest amount of the QIP was essentially the bank, right? It was one more type of a bank, right? Please remember. And they had issued around 22,000. I'm just rounding off the number, not a bank. It was Coal India. Coal India. Please correct it. Coal India, which had issued around 22,000 crore worth of shares under QIP. So these are certain very important points associated with the first article. Now, based on this, let's solve the question. MCQ number 1 for this session. Consider the following statements. Once a QIP is done, the equity ownership changes. Once the QIP is done, does the equity ownership, which simply means the percentage ownership in an entity, does the equity ownership change? Yes, it changes. Second, the participation of promoters is allowed under QIP. No, it is not allowed under QIP. It is allowed under another form of private placement, not under QIP. So first statement is true. Right option for the question will be option A, that is only one is correct. Now before I go forward to the next article, I want to ask one question to all of you. And I want you people to answer to this question in the comment section. What if there is a rights issue done? I repeat, what if there is a rights issue done? Does the ownership change once the rights issues is done? Do let me know what is the right answer in the comment section. Let me go forward to the second article. The government as well as the Reserve Bank of India are considering allowing entry of NBFCs into banking sector. In the last couple of months, there has been a lot of discussion and debate happening regarding the banking sector entry to other entities. What do I mean by this? Couple of months ago, certain small finance banks approached Reserve Bank of India and they argued that they should be allowed to enter into universal banking. That is essentially on the likes of State Bank of India, ICICI, Punjab National Bank, etc. And now there is one more article in the Financial Express which is raising one more important topic for you. That is, the Reserve Bank of India as well as the Government of India are considering allowing certain NBFCs to enter into banking sector. Let's unpack this article. Let's understand what are the important points here. The Reserve Bank of India follows a concept called as on tap licensing. On tap licensing. That is, there is no specific time period when you can apply for a license to open a bank in India. Any point of time you feel like you are eligible, you feel like RBI will give you a license, you can approach Reserve Bank of India and apply for a banking license. But specifically understand this, Reserve Bank of India in the last decade has banned entry of corporate houses. Has banned entry of corporate houses into banking. What is the logic behind it? Although there is a lot of, let's say, demand for this, RBI simply says if I allow the corporate houses or business houses to enter into banking, there might be certain spillover effect, there might be conflict of interest, banks might end up lending to, right, let's say the owners which are owning these particular banks. So citing multiple reasons, RBI so far has refrained from giving license to the business houses in India. But mind you, business houses in India are allowed to open NBFCs. They are allowed to open NBFCs, by the way. Okay, they are allowed to open NBFCs. Now, one more very important point of concern for the government of India is there are multiple banks in India which are large banks, which are competitive in the international market. For example, if you take the top 100 banks globally, the top 100 banks, and when I say top 100, I'm looking at the asset size of the banks here. So if you take the top 100 banks, only two of the banks from India are featuring in that particular list. And I know a lot of you will be ready to basically ask me, sir, which are these particular two banks? As usual, the usual culprit will be one, State Bank of India, and the second one will be HDFC. So these are the two banks which feature in the top 100 banks in the global market. The government of India is worried that it aims to make India a developed country by 2047. But to become a developed country by 2047, you need to invest a lot of money in developing infrastructure, be it economic infrastructure or social infrastructure. You require huge amount of investment. But considering the fact that we do not have very large number of big sized banks, we do not have sufficient number of large banks in India, there might be certain amount of shortage in terms of development of infrastructure lending. Let me give you a basic idea here. The government of India has launched a program called as National Infrastructure Pipeline. Take a wild guess. How much is the total investment that the government of India is planning under this? Some of you might be thinking, sir, it could be 40 lakh crore. Somebody might be thinking it could be 70 lakh crore rupees. You are way below than what is targeted by the government. Under National Infrastructure Pipeline, the total amount of investment that the government of India is targeting, again including the state governments, including the private sector, including the union government, the total amount of investment for the development of infrastructure is 111 lakh crore rupees. You heard it right. 111 lakh crore rupees. Three times the annual union budget expenditure for government of India. So I hope you understand the point here. The government of India is worried that we may not have sufficient number of banks which will take risk, provide loans for development of infrastructure. So what is the solution they are considering now? They are considering allowing NBFCs to enter into banking sector, give them license to open banks. Now whether this will be done or not, you'll have to wait and see. But definitely, yes, this is one of the very important considerations that is being taken up by the Government of India as well as Reserve Bank of India. So, associated with this discussion, let's solve an MCQ. Consider the following statements. The government has nationalized the banks in two rounds. Yes, this statement is true, by the way. And if somebody wants to solve the question before me, you can pause the video, solve the question, and then listen to the explanation. So the government has nationalized the banks in two rounds. Yes, 1969 and 1980. 14 banks were nationalized in 1969. Some books will say 1969, some will say 1970. Don't be confused. Proposed in 1969, it was challenged and again implemented in 1970. So 1969 and 1980, yes, two rounds. Yes, this statement is true. The business houses are allowed to own the NBFCs, but not the banks in India. Absolutely true. You can open NBFCs, non-banking financial companies, but you are not allowed to own banks in India. In fact, I'll add one more very important point here. There is a law in India by the name of Banking Regulation Act. Banking Regulation Act. Under the Banking Regulation Act, if you are a promoter of any of these particular banks, I mean, if you're a promoter of any of these, right, let's say bank, you might be having more than 26% ownership. That is, in terms of votes share, you might be having more than 26%. But RBI will basically provide you a plan. Right? Phased approach is followed by Reserve Bank of India, where you will be asked to reduce your ownership. You will be asked to reduce your ownership to maximum 26%. Right? Because the RBI is worried concentration of ownership might be detrimental to the operations of the banks. Third statement, the government has reduced the ownership in all the PSBs to below 75%. Slightly tricky statement. A lot of you will be prompted to say yes. Right? You'll basically say, yes, sir, it is true. But this particular statement is incorrect. Why? As we speak, even today, there are certain banks where Government of India's ownership is more than 75%. There are banks. For example, Central Bank, right, or India's overseas bank, etc. The ownership is more than 75% there. So first and second statements are true. Right option for this question will be option B. Only two statements are correct. Let me move on to the next article now here. Next article from Indian Express, associated with agriculture sector. Three Indian companies. You don't have to remember the name. The names of these companies is given in the article. IPL. IPL is India Potash Limited, by the way. They're not talking about the cricketing league. India Potash Limited. IPL, Kripco and Coromandel. Three Indian companies have signed an agreement with a Saudi company. They have signed an agreement with a Saudi company regarding what? Starting 25 and 26, for the next 5 years, these three Indian companies will be importing, I repeat, will be importing the diammonium phosphate of 3.1 million tons into India. Is everybody okay? I'll repeat the statement. Starting 25 and 26, for the next 5 years, annually, these three entities would be importing diammonium phosphate of 3.1 million tons annually into India. Right? This is the news update. But what is the importance of this? What is the relevance of this particular article? Let me explain this. Very recently, there is one terminology which has come into discussion. That is silent blockade. Remember this, silent blockade. What is this idea of a silent blockade? What is the connection to this newspaper article? Let me explain. Historically, if you see, India's backbone is agriculture sector. More than 45% of the population which is working is there in agriculture. It contributes to GDP, it contributes to exports, etc. But the problem has been in terms of inputs such as fertilizers. In terms of inputs such as fertilizers, India produces fertilizers. No doubt, India produces fertilizers, but the production is falling behind the consumption. The production is there, but the consumption is much higher compared to production. As a result of this, India is import dependent. Remember this, India is import dependent on these particular fertilizers. For example, the three most important fertilizers are urea, the diammonium phosphate, and the muriate of potash. I'll repeat the full forms here: urea, diammonium phosphate, and the muriate of potash. Urea, we are able to produce 77% of the total consumption in India. Diammonium phosphate, 40% of the total consumption in India. What about muriate of potash? In context of muriate of potash, it is 0%. 0% of the consumption we produce in India, which means whatever we consume in the form of muriate of potash, we import all of it. And when you're so import dependent, one country that will keep on exporting to you, obviously in this case, will be China. Correct? One country that keeps on exporting a lot of these goods, right, manufactured products, etc., will be China. At one point of time, India was importing around 40% of the total requirement of fertilizers from China a decade ago itself. But over a period of time, Government of India has promoted production of fertilizers in India, and we have diversified the sources of fertilizers that we are procuring from other countries as well. As a result of this, the dependence on imports of China, fertilizer imports, has gone down. As per the latest data, India imports around 10% of the total requirement from the country China. But what is the connection to this particular term, silent blockade? The silent blockade here refers to the recent policies or the measures which have been undertaken or implemented by the Chinese government. It has been seen that the Chinese government, whenever these fertilizers are being exported to countries such as India, has imposed certain restrictions over it. And because of these kind of restrictions, these exports which are supposed to come on timely basis, especially the special fertilizers such as liquid urea, right, or the neem based urea, etc., these kind of specialized fertilizers, the import of this has been affected. And in that particular context, you will have to look at this article where the three Indian entities from India have signed an agreement with the Saudi exporter or Saudi company, which guarantees that 3.1 million tons of the diammonium phosphate will be exported on annual basis to India. In addition to this, the agreement also provides for extension of the agreement for another 5 years. Let's say 5 year tenure is over, both the parties, that is India on one side and the Saudis on the other side, both the parties are okay with the agreement, then the same agreement can be extended for another 5 years. And the agreement also has a provision: over a period of time, other types of fertilizers can also be covered under this agreement. So in that particular light, please have a look at this article, which is very much relevant in terms of Atmanirbharta or self-reliance or even promotion of food security in India. Let's look at a question associated with this. Consider the following statements. India imports complete requirement of MOP fertilizer, muriate of potash fertilizer. Answer is yes. And I know some of you might be thinking, sir, we are producing urea. Certain amount of urea we are producing. We are also producing diammonium phosphate, certain amount, right? At least 40% of the total consumption. Why not muriate of potash? The reason behind this is whenever you want to produce a fertilizer, you'll require inputs. And what if you do not have any kinds of inputs that you require to produce a MOP? Those inputs are not available in India. And that is the precise reason we are import dependent in case of muriate of potash that is consumed in the agriculture sector. The Indian government has imposed physical controls over the movement of fertilizers. What do you mean by physical controls? The government of India, through various measures, for example, fertilizer control order, controls how much fertilizer is produced in which state, does it cross the border, where it is sold, right, etc. So the Indian government has imposed a physical controls over the movement of fertilizers. The statement is absolutely true. Both the statements are true. Right option for this question will be option C. Both of them are correct. Let me move on to the next article here. Meghalaya, a model of purposeful growth. A statement given by Finance Minister. If this article is given in the Hindu newspaper, I know most of you look at the headline and say the article is absolutely useless. It doesn't have any information. Why? UPSC will not ask you a state related question directly like this. But please understand, this article has certain relevant information for you. What kind of relevant information? The finance minister is talking about an initiative, that is the special assistance to states for capital investment. I'll write it here. Special assistance for the states for capital investment. SASCI. What is this initiative? This was one of the very important initiatives that was launched by the government back in 2021. And that was the time period when pandemic was having a larger impact on the Indian economy. Under this initiative, the government of India offered certain amount of loans, that is long term loans were offered. Long term here basically means 50 years. 50-year loans were offered to the state governments, but the idea was the states should be using these particular long term loans for investment in infrastructure. The states should be using this money in development of infrastructure. And one more very important feature of these long-term loans was these were interest-free loans. These were interest-free loans. That is, the states which will take loans under this do not have to provide any kind of interest to the central government. And this money will be repaid. Principal amount would be repaid after 50 years to the central government. This amount initially was 50,000. It has been changed. It has been increased by the government. For the current financial year, the government of India has allocated under this initiative 1.5 lakh crore rupees. Please remember this. 1.5 lakh crore rupees. Now, what is the connection of this initiative with the state of Meghalaya, which is being praised by the finance minister here? Finance minister is saying the state of Meghalaya was offered certain amount under this initiative. There is a formula that is used by the government, which is again connected to the formula given by the Finance Commission for Devolution. So that particular formula will be used by the government to decide out of 1.5 lakh crore, how much will go to state 1, state 2, state 3, state 20, etc. But please remember this, out of whatever funds are allocated under this initiative, 60% of these particular funds, you will have to use it for infrastructure, unconditional. That is, whether you basically satisfy any conditions imposed by the government, doesn't matter. 60% of the funds will be given to you. But the remaining 40% are conditional in nature. Please remember this. The 60% are conditional in nature. And there's a particular reason why I'm telling you this particular point. Until recently, the conditions that were imposed by the government, what do I mean by condition? State governments were supposed to implement, let's say, agriculture reforms. The state governments were supposed to implement power sector reforms. And if you keep on meeting these particular conditions, certain amount of funds out of 40% would be allocated to you. Right? It would be allocated to you. But now government of India has changed these particular conditions. Please be aware of that as well. Now the conditions are associated with the idea of digital public infrastructure, DPI. The center says We will define the conditions, or let's say we will define the parameters under the implementation for DPI. You meet these particular targets and the amount, that is a 40%, will be released to you. So these are certain very important points associated with this article. The reason why finance minister is talking about the state of Meghalaya, talking about purposeful growth, the terminology used is simply more than 5,400 crore rupees were allocated to the state of Meghalaya under this initiative. The finance minister says that the state has effectively utilized, I repeat, the state has effectively utilized these particular funds for the development of infrastructure. In fact, examples such as a road development which has been done by the state also has been mentioned by the finance minister here. So that is the reason the finance minister simply says the state of Meghalaya has been using the funds and using it for the right purpose, driving the growth. Now let me go forward to the next article. Liquidity flows back to Reserve Bank of India into SDF. What are the important points? Point number one, in the list of the monetary policy tools or credit control tools, there is a tool called as Standing Deposit Facility. Standing Deposit Facility, SDF. And what is the speciality of this particular SDF? Under SDF, the banks are allowed to keep deposits with Reserve Bank of India. The banks are allowed to deposit the money with Reserve Bank of India, and RBI in return will not be providing any kind of collateral. No G security, etc. No collateral will be offered by Reserve Bank of India. But certain rate of interest which is marginally 25 basis points lower compared to repo rate will be offered by Reserve Bank of India to these particular banks. Now, this tool was introduced by RBI a couple of years ago, 2022. And the objective was, what if the banks will deposit money with Reserve Bank of India and RBI doesn't have sufficient collateral under reverse repo rate? So, address this particular issue, we have introduced the model of SDF. Now, what has happened in recent times? Why is there a discussion associated with this here? Let me explain this. RBI has intervened in the forex market. What do you mean by intervene in the forex market? In recent times, that is in the last year, RBI has intervened in the forex market to stabilize the value of Indian rupee. To stabilize the value of Indian rupee against the foreign currency. And whenever RBI does this, in certain situations, the amount of rupee that is supplied in the market will suddenly increase. The amount of rupee that is there in the market increases. And the availability of liquidity in the market will also start increasing. So please understand the logic behind it. RBI interventions in the forex market can contribute to increased money supply in the forex market, and that in turn will lead to huge amount of or excess liquidity in the banking structure. In addition to this, RBI very recently has also cut down CRR, cash reserve ratio. Right? And when the RBI reduces cash reserve ratio, what happens? The amount of money supply in the economy, please remember this, amount of money supply in the economy suddenly increases. All I'm trying to say is very simple here. The banks are supposed to collect deposits from customers, use the deposits to give loans. Is the flowchart okay with all of you? Use the deposits to provide loans. Now, what if in the banking sector or in the overall economy, the money that is supplied, the liquidity that is already there is a surplus? The liquidity that is there is already surplus. That is, a huge amount of money is already there in the banking sector. In addition to this, what if I say the amount of loans which are issued are also not growing at a very fast pace? Technically, what if credit offtake? The technical term to be used here is credit offtake. What if credit offtake is not growing at a faster pace? So please have a look at the situation now. The banks have a huge amount of surplus liquidity, and on the other side, they are not able to increase more and more loans or the credit offtake, that is the loans given to borrowers, at this particular point of time, many of these banks will look at the situation and simply say, let me take this surplus money that I have and deposit this with Reserve Bank of India. Rather than lending, I'm averse to lending now. I'm not able to increase more and more loans that I'm issuing to borrowers. So let me do one thing. Let me take the money and deposit this with Reserve Bank of India. And this is exactly what is happening in the context of standing deposit facility. The amount of money that has been collected under STF for the June quarter, the amount of money that has been collected under STF for the June quarter is the highest since the introduction of STF. How much? The amount of money that has been collected in the June quarter is 2.6 lakh crore rupees. 2.6 lakh crore rupees. That's not a small amount. It also means this amount is not available, not being used by the banks for lending purposes. So the concerns have been raised associated with this, and that is the precise reason you must be seeing. The bank is conducting, that is Reserve Bank of India is conducting variable reverse repo rate auctions now. Variable reverse repo rate auctions, wherein the banks will basically offer a range of interest rate at which they would be depositing money with RBI, because RBI is worried there is excess liquidity present in the market as of now. Let me go forward to the next article, the last article for today, that is coming soon, 2 coins to commemorate Atmanirbharata. Now, what is this idea for commemorative coins? Listen to me carefully. Whenever you talk about coins, point number one, the coins are minted by the government. Is the point clear? The coins are minted. Currency notes are printed, coins are minted. Now, when you talk about minting of the coins, there are certain coins which will be used or minted only for the purposes of circulation. Only for the purposes of circulation. That is circulatory coins. I will mint the coin, give to you. You will simply use the coins to purchase, conduct transactions in the market. At the same point of time, there are also certain coins which are called as commemorative coins. Commemorative coins. Although I'm using the term commemorative in the context of coins, can there be commemorative currency notes? Yes, that is very common practice. But what do you mean by the term commemorative here? These are the kinds of currency coins, or let's say currency notes, which are created, which are basically made in order to recognize a certain personality, certain historical event, etc. Right? For example, earlier RBI has printed or RBI has issued, distributed various currency coins which have, let's say, logo of right certain historical event, which has a picture of certain historical event, 150th birthday of certain people, or let's say 100 years of birth anniversary of somebody. These kind of incidences being depicted in the currency notes or currency coins is very common, and these are called as commemorative currencies, right? And most of these commemorative currencies, please understand, most of them, when you talk about coins, these are for circulation purposes. That is, you depict a certain event, but it is basically used for circulation purposes. But there are also commemorative coins which are essentially collector editions. Which are collector editions. For example, this one here, the one that they're talking about here, there are 2 coins which will be issued now. One is basically celebrating the achievements of Mr. M.S. Swaminathan, who was a very important personality in terms of promotion of Atmanirbharta in terms of milk production and consumption in India. And there is also one more initiative that the government of India wants to celebrate, 10 years of Make in India initiative. Now, in this particular case, if you look at the coins that they're talking about, they will have a face value of 100 rupees. Okay, they will have a face value of 100 rupees. But when you talk about these coins, let's say they are saying the amount of silver out of 35 grams, right? The weight of these particular coins, silver will be 50%, copper will be 40%, nickel and zinc, right? Both of them will be 5%. Now you just think of this. If you make a coin where around, let's say, 16 grams or 17 grams is silver, where, right, you also have copper, etc., don't you think the actual value, the actual price of the coin will be much, much higher? So when these kind of coins are made and issued, these are not for circulation purposes. These are essentially the collector's edition. These are issued, these are sold, right? You will be able to purchase them at 5,900, 6,300 rupees, etc. When once they are available, right, once they are made available by the government, but the price will be much, much higher. So remember, the intrinsic value, that is the actual worth of the coin. Intrinsic value is dependent on what is present in the coin, what is it made up of. So the intrinsic value of the coin here would be much, much higher compared to face value of the coin, which will be 100 rupees here. Done. So two commemorative coins to celebrate 10 years of Make in India and to celebrate the achievements of Mr. M.S. Swaminathan. The government has issued a notification of issuing these two currency coins. So based on the discussion I've had regarding the coins, let's solve the MCQ here. Consider the following statements. The non-circulatory commemorative coins have a higher intrinsic value compared to the face value. Non-circulatory means collector editions. They have higher intrinsic value compared to the face value. Yes. The coins are minted by the government. Yes. The coin minting is under the purview of the government. Currency note printing is under Reserve Bank of India. But I have one more question to all of you. Second question, by the way. Does Reserve Bank of India print all the currency notes which are issued in the market? Do let me know the answer to the question in the comment section below. RBI plays no role in minting and distribution of the coins. Please listen to me very carefully. Minting of the coins, yes, RBI plays no role. Government of India has a minting presses throughout India. They will get them minted. But in terms of distribution, please remember whether it is coins or, right, let's say the currency notes. Whether it is currency coins or currency notes, the distribution of it is done by Reserve Bank of India. It is done by RBI. So third statement is incorrect. So the right option for this question will be option B. Two statements are correct. Now, as usual, at the end of the session, I'm giving you two assignments. Those who want to practice mains answer writing, these are the two assignments. One, the article from Business Line, editorial, which basically talks about what should be done by the government of India in the trade negotiations in order to protect the farming sector. I'll connect it to current affairs. In recent times, there is a lot of discussion whether should government of India, if at all the trade agreement is signed, should government of India throw open, right, the agriculture sector? Should it throw open the agriculture sector so that USA will start exporting more and more agriculture commodities? So what is the logic behind it? Should government of India do? Why it should not do? All the points are mentioned here. Please read the article, then take up the assignment. The government needs to protect the agriculture in the trade negotiations as it is the backbone of livelihoods and food security for the farmers. Elaborate 15 marker question, 250 words. Another question, there is a lot of debate that has been happening in the context of stable coins. The USA government also has introduced a bill, Genius Act. Genius Act. So there is a discussion associated with stable coins. So the question is based on that. What are stable coins? Discuss the issues and benefits of adopting them, right? Basically elaborate these particular points, 15 marker in 250 words. So these are the two assignments as well as the articles I wanted to discuss with you people in this session of economy this week. If you like this initiative, do not forget to hit the like button. If you're yet to join our YouTube channel, kindly do it right now. And if you have any doubts, queries associated with the concepts that I've discussed in the session, do not forget to drop in the doubt in the comment section. Thank you. Have a great day. See you next time with another set of articles.